Good afternoon. This is our weekly insight for November 27th, 2012. In last week's insight, we took a look at the stock market performance over the past 12 months, and we just showed that the upside in the market really was driven by an expansion of the PE, or the price to earnings multiple. In other words, the same level of earnings were given a higher valuation by the market, and that's what resulted in the positive performance in the market. And so in this week's insight, we just take a look at what it's going to take for the stock market to have a repeat performance over the next 12 months. And this could come from one of two things, or a combination of two things. The first one being more expansion in the PE multiple, which is possible. But the second one would be growth in underlying earnings. And there's two primary headwinds to companies growing earnings going forward. The first is that profit margins, or the amount of money that a company makes on a certain level of revenues, those margins are already very high and kind of running at historically high levels. So it's a widely held view that any more expansion in the profit margin would be limited from here, because there's only so many costs a company can cut. The second big headwind is simply that the macroeconomic environment is one in which large multinational corporations are going to find it tough to source revenue growth or top-line sales growth. So there's a lot of interesting data and little nuggets and facts in this insight. And as always, if you have any questions on anything we wrote in the insight or anything else in the email, please feel free to reach out to us directly. And we would welcome any questions or comments from any of you. We hope you have a great week, and we will talk to you next Tuesday. Thanks a lot.